A few months ago, we released part 1 of the scalping course with Michael Thomas. Michael wanted to do an intro to scalping. If you've not watched this video yet, go watch it, it's in your corner. Now we're releasing part 2. It's been highly requested. So we're gonna dive into more details of scalping, some strategies, some tips to scalp better, and really make a good income out of it. So this is part 2. We can do part 3 if you want. Let me know in the comment section below if you want to see more things after this video is done. Any other questions, we might do a part 3. And we'll dive right in.
Hey, thanks, Etienne. Always a pleasure to be back, particularly on a topic that's very near and dear to me. And I speak with a lot of passion about scalping because it's been very great. This year has been so far very good as well. We both agreed that this particular scalping course that we released a few months back had more feedback and more inquiries into having a Scalping 2 program. And so we just decided to do that and release that to you today. So glad to have everyone here. Buckle your seatbelts. It's really good stuff, and we'll get right into it. If you haven't watched the intro to scalping, that's okay. We'll put the link down below so you could watch that. We'll do a quick refresher before we get into the actual content, including some strategies that have really been working well for me for the past 5-7 years, but particularly so far year to date. All right, so let's get right to it. All right, so we'll do a brief refresher, but before that, let me tell you what we're going to talk about today. We're going to get right into it. We're going to get right into the core setups that we use, and I use pretty much on a daily basis. My scalping has actually been my best performing strategies so far this year. Who knows if that'll continue? It's actually outperforming my trend-based strategies, which is pretty interesting. So I'm sticking with it. As you go through the setups and we discuss them, think about which one might fit you the best. It starts with identifying. We're going to go over a few. Which one may be the one that you can connect to the most, and then you kind of run with that, all right? And we'll keep it light on the math. There is some math involved here, especially with scalping. Every little tick and pip counts, but we'll kind of keep it light today on the math, all right? So a brief refresher from scalping part 1. Remember, the key to this is not having the need to be right, all right? That is a killer. You're going to have losses, particularly in scalping. That's okay. We're looking at the net positive effect that you'll have on your trading. So accept those losses and move on. We talked about the qualifications to be a scalper. We'll talk about that in a little bit as well. In addition, flawless risk management and focus. You're really executing a solid plan. And remember, scalping doesn't eliminate the need to journal. Is it more tedious? Yes. And there's a lot of good software out there that we can introduce you to, but really, even a good sharp pencil with an Excel spreadsheet or Google Sheets will do the job. But scalping, because there's more quantity of trades, doesn't mean you eliminate the need to journal. And remember, trade like a surgeon. Surgeon gets in that office every morning, preps up, and just performs his job with precision. That is our job as a scalper. Okay, let's get to it, all right? Pencils ready, pens ready, snipping tools, cameras ready. Let's go, all right? You want to mark these down and memorialize them so you can see which one would be a good fit. No fluff here today. Let's get right to strategy 1. When screens turn red or when screens turn green. All right? A lot of these strategies, you're not going to need 5 monitors and platforms. A lot of my scalping is done on the road where at best I have a laptop, and most of the time I just have my smartphone app that I'm using, whether it's at a dinner table or hiding it underneath a table or chair or something like that. That's the reality of scalping. We want to make sure we're there for those opportunities that present itself. And if you miss them, it's okay. There's plenty more. That's the great thing about scalping. So let's go. When screens turn red, what we're looking for is a catalyst. Every strategy, whether it's a daily chart trend-based or scalping, don't forget, you have to have a catalyst. What was the trigger that made you interested in this trade that's going to provide the edge, at least historically, that's going to give you? When overnight sessions, particularly we're looking at equity futures here, but you can apply them to anything. If they were higher from the prior day's close overnight, and then all of a sudden they go negative, that's a catalyst. Is it going to work every time? No, but it's a trigger to say, something's interesting, something dynamic happened. And again, we're looking to take crumbs off the floor. We're not looking for home runs here. That's enough for me to start to get interested, very interested. In scalping, that usually means pulling the trigger quickly thereafter. So let's go over the strategy and the components. You're positive overnight, right? Kind of a dull market, and you're not watching it, but maybe go to sleep, you wake up in the middle of the night, check the futures, like junkies like me do. Price is trading inside yesterday's range. All right, so what we're looking for is a dull overnight session. Nothing really happening. You could use a 3-minute chart. You could even use a 1 minute if you like, up to 5 minutes. But I use a 3-minute. It gives me a nice perspective. Remember, mark yesterday's closing price and today's opening price if the open has happened already. If you're overnight, you're not going to have that, but that's okay too. Let price move away from yesterday's close. That's what we want. When price moves away from yesterday's close, that creates the opportunity to revert back to that. Remember, we're looking for price to be trading inside yesterday's range. Assumption, kind of a dull market, nothing really happening, no big news overnight or anything like that. Okay, let's look at the chart on the right. So we have a dull market. Prior day close is that line in the bottom. So we're higher throughout the night. And let's just say this is the overnight. Doesn't matter, right? Price comes down, right, all the way down to the prior close. Bounces right off it. Very, very normal, by the way. And then you have this lethargic price action. Comes back, and for the first time, breaks below. When screens turn red, remember, the overnight session has been green the entire time. And then, all of a sudden, screens turn red, or at least on this particular index. The hair on the back of your neck should be standing up for a potential for a scalp. And the best thing about it is we have a really good opportunity for risk management in the sense that we know where we're wrong. Where? When screens go back to green, if they do. So if it was a false breakdown, okay, we know we can get out. We're going to enter at the close of the bar that crosses the opening, all right, the prior day close. So here we go, boom, red. We're going to enter right here where I have the word entry. Stop below the swing above the prior day's close. Why? Clearly something happened where it didn't work out. And I like to give it a little room, so that swing right over there, okay? All right. Some people like to put a tick above the prior day close. I kind of feel like I'm a sitting duck there. You want to give these a little room. And for target, I like to put a 1-to-1 risk reward, but I'm really watching this. I mean, again, we're talking on a 1, 2, 3-minute chart. I really like to just keep following this thing. Our initial default setup will be a 1-to-1 risk reward. All right, so I want to make sure my stop is on the other side where screens would turn back to green, which I'm not anticipating. So we'll have a 1-to-1. Again, we're not looking at that many points here on ES futures, but this is the whole idea of scalping. We're taking crumbs off the ground, getting our 4 or 5 points, and getting the heck out of there. All right, try to keep a minimum of 1-to-1 risk reward. I go a little lower sometimes, but you're not looking for this 10-to-1 risk reward. You can do that. The math is there, but let's stick to the core basics. So again, when screens turn red, or in case screens turn green, you want that catalyst to show something has changed. And I love it here in this example where, look, price came all the way back down, tested the prior day's close. There's a lot of battles over there, okay? This is very normal for the bounce there. You can even argue a long scalp. You have that lethargic price action, and then boom, breaks through it, okay? We want to be on that side with momentum carrying us to the promised land, okay? A relatively simple type of strategy, but we see a lot of this and a lot of opportunities to scalp. You can do it in the overnight session. So if the insomniacs out there who want to trade, there's a lot of times that we'll do this. You can put an alert at the prior day close. So if you want your phone to give you like a vibrate notification, that's how I do it. Or if you just happen to be watching it and it breaks through, take advantage of it. Pretty simple stuff. The question and the key is to keep that stop reasonable. Let the stop not kill you if you have a couple losing trades, and at the same time, let price go back against you where screens turn, in this case, turn back to green, all right? Because it could happen. It can tease a little bit. But once it breaks down there, I know I'm in the driver's seat, and I'm just going to ride it out. Okay, so your framework for strategy 1. Backtest the strategy with 100 trades, for example, or a decent sample size. The cool thing about scalping is you'll get those sample trades out pretty quickly because there's so many opportunities during the day. Do it again with another 100 trades. What I want you to do is just really validate and verify the outcomes, but at the same time, your ability to execute it. Historically, my profit factor has been about 1 to 3, 1.3 to 1.75. It will vary based on different market conditions. In a more volatile market, you should be getting more meat off the bone. But 1.3, 1.75, again, we're not going for home runs here, just taking crumbs off the floor. And we need an 85 to 90% compliance rate in your execution. That means your identification, means your trade management, which is mostly set it and forget it, and your ability to manage the trades and do it properly. It's so important, the execution compliance, and mark this in your trade journal, that you have to be able to execute these properly. All right, take a deep breath. All right, good. Take a snapshot. All right, good. Let's go to strategy number 2. Scalping is a cool thing, but you want to have as much information as possible. And keep in mind, at least from my perspective, that information is limited. I'm not going to have, most of the time, have all the data that I need in front of me. I'm going to be doing this mostly on a smartphone, usually outside or while traveling. Okay, so I call this the road to VWAP. So what are we talking about here? We're going to mark the overnight high and low range. And for this example, I'm using the S&P futures, but we can use anything that trades in a 24-hour market, FX, Bitcoin, things like that. We use a 5-minute chart using Heikin-Ashi bars. The reason I like the 5-minute chart in this one is too tight of a time frame. The Heikin-Ashi bars can kind of show a lot of noise, and we don't really want to do that. It will give you false signals. All right. We'll block the overnight range. We're going to mark the high and the low. So you can just highlight that. If you're on a smartphone, again, just check and see where the high and low is and work off those numbers. You don't have to have charts all over the place, right? Just have little numbers on a napkin. That's how I do it. We also want to have VWAP. Okay, VWAP is going to be our target. So even if you don't have a chart, if you notice, don't even need a chart here. You just have a couple data points that you're writing down on your restaurant napkin. All right, stops above the high and the low of the day if you're in a live session, or the overnight high and the low if you're trading the overnight session. We'll keep target 1 minimum of 1-to-1 risk reward. And that target is, of course, VWAP. That's our magnet. I call it my magnet trade. So let's look at the chart and go over this. We have our overnight low right here. All right, and let's just say this dot is our overnight high. Okay, it doesn't apply here right now. We have price come over here. This is the live session, so this white is the live session. We make a new high. It's fine. And we come all the way down to the overnight low. Right, we crash down to the overnight low. Remember, we're breaking that. So what happens is when price goes back into that range, the hair on the back of our necks should be standing up. It shouldn't be doing that. The seller should be pounding this to make new lows. So it tested, broke the lows, and immediately snapped back. And again, on a 5-minute chart, this is about 20 minutes of price action, okay? 30 minutes or so. Price goes back, blue HAs or green HA, Heikin-Ashi bars, whichever suits your fancy. And if you notice, price closes back into that range. Stop below the low, target VWAP. Always, always, always target VWAP. That's my sort of added edge that has historically given me pretty good results. So we're going to go with that. Goes below the overnight low, pops into that range again. Hair on the back should be standing up. Stop below the low, target VWAP, right? Minimum 1-to-1 risk reward. And you may have to have a little patience with this particular one. But what I don't want is if price comes back into the range and it's right up against VWAP, you're going to have a horrible risk reward and you just want to pass on those, okay? The cool thing about scalping, and I'll bring this up again several times, is there's going to be so many opportunities. So don't feel, I know it's frustrated when you miss opportunities. Oh, it's a great setup on a 60-minute chart and you don't see one for the rest of the week. Don't worry about scalping. You know, you take a break, go to the restroom, come back to the dinner table, and there's probably another scalp ready to happen. So that's another cool thing about scalping. Framework. Back test again with 100 trades. And I say 100 because it's like a nice round number everyone can remember, but that's enough in a series of trades to give you a flavor of can you execute it and can you identify it. Do it again with another 100. All right? Again, just revalidate it. If anything, it will give you your confidence to execute in a live environment. Looking for a 1.4 to 2.0 profit factor, okay? So every time they click the button, net, you'll be making money. Not on every trade, of course, but after the 100 trades. 85 to 90% execution compliance. Really, that should be in the mid 90s once you get really good at it. There should be no reason why we're messing around with stops, going for things, changing rules. If you want to go extend your targets, that's fine. But really, our job here as scalpers is take the money and run. A lot of these trades, in this particular example, hit the target, right? Consolidated and kept going. Oh, you left so much money on the table. It's not your job as a scalper. Take the money and run. Right? That's how we make a living scalping. Let's reiterate what we hinted a little bit about in the first course that we talked about on scalping. What are the results telling you? Okay, you want to see your outcome in points and pips, ticks, whatever they are, whatever product you're trading. Make sure you journal them. Was your trade setup compliant? We've talked about this 3 times already. Right? It's so important. It doesn't matter what the strategy is, how successful it can be if you're not executing it with compliance. All right, follow the rules. The setups that I gave you are relatively simple. There's not a lot of stuff going on because most of the time I design these strategies really because I know you're going to be on a smartphone, a tablet, things like that. You're not going to have all the tools in front of you. And if you do have that in front of you, even better, but actually could hurt you because you get too much into data overload. Keep these strategies simple. Measure your batched results. All right, in scalping, you are going to have variance where some days this stuff just doesn't work. But you're going to have your stops, you're going to take them and maintain your compliance. But over a series and batches a series of trades, you should start to see the results. And you'll also improve personally. So identify what you need to do to improve your execution of these, including the identification itself. Practice in demo only. Again, the cool thing about scalping is sometimes demo can be really boring if you're on a bigger time frame, but scalping, you could just crank them out 8, 10 trades a day if you like. Especially that when screens turn green kind of thing. Look for catalysts that raise the eyebrows. Say, okay, this shouldn't be happening. It's been positive all day and overnight, and all of a sudden we go negative. Right? There's a lot of stops, a lot of traders who get frustrated at that level and start hitting their stops right below that area. Well, let's take advantage of it. All right, they're selling. We'll ride that wave as well. Okay, we'll short into that. Let's go to the next slide. So to reiterate, again, you want to be a scalper, you really have to sort of qualify or apply for the job. We want you to get up to a 95% trade compliance level. Can you do that? Well, it starts with making those mistakes and learning from them. Okay, so slowly but surely get you there. Focus on 1 to 2 products and crush it. You do not need to be looking at 100 stocks, 30 pairs, and a bunch of futures, oil, and gold. 80% of my trades are on one product, the S&P futures, and then the other 15% is on NASDAQ, and once in a while, I'll go a little crazy on some commodities or things like that. But as far as scalping, that's how I make my living. One product, be the master of 1 to 2 products, and just crush, manipulate, rinse, wash, repeat. Make the mistakes. Do that in demo, and then you'll learn from them. Okay, when you first start doing this for the first week, you're not going to be crushing, I can tell you. Everyone I've taught, and this does not crush it the first week. And if anything, they're probably confused as hell, but that's why you have a coach and an accountability partner if you have a trader who does that. All right, let's go through. Let's go through one more. Okay, strategy number 3. I told you I'm going to inundate you today. I hope you can hear the passion. I'm having a good year scalping, okay? So I'm enjoying it. And quite honestly, it doesn't really meet my lifestyle requirements. I like more swing trading, options premium selling. But if the markets are there and they're volatile enough and not too volatile, I have to take advantage of them. So the cool thing about scalping, though, is not sitting in front of a desk all day either. Take a few crumbs off. I mean, a lot of times I'm done in the pre-market with scalping, and I may see a few during the day, but I'm done. I'm just locking in my green, and I want to enjoy my life. Trade setup number 3. Remember we talked about in strategy 1 where you wait for price to come down when screens turn red? Well, while you're waiting for that to happen, price is moving in that direction. There's maybe a trade there to scalp. Why should I wait for the price to go all the way to where I think this is going to happen, and then it happens, and then I enter? Well, scalping, there's so many other opportunities. Why don't I take advantage of that move to that area? So you almost have like two different types of strategies, all within the same sort of price movement. Really cool stuff. All right, let's look at the chart. So price is moving, we're using the same chart as we did in strategy number one, but price hasn't got to that prior day close. Remember, it's up all day. So price comes back down, all right, and we start our chart here. Price comes down, and then it starts to move up. Okay, so we're still in positive territory. This is like an overnight session, for example. But it came down close to the prior close, but now it's starting to bounce up again. Okay, that's fine. But that magnet is the prior day close. That's what we're looking to do. Even if prices are moving up, quite often price will come test those and then off to the races and continue its uptrend. We want to take advantage of that and fade that. So price is moving towards the prior close. Wait for the bounce. Let buyers get sucked in, all right? When this price movement like this, hopefully this is just buyers that are going to bail when you're short. We're going to put a Fibonacci 618 retracement. Now, if you're on a smartphone, check and see if your app has that. Most apps now, they're pretty savvy. They have Fibonacci retracement lines, okay? If not, this is what I've done too. I'm literally like sometimes can't fall asleep or something. You just measure, all right? If it's 20 points away, 20-point range, 10 points in the middle is a 50% retracement. So what's a 6.8? 12. I've made so many trades on the back of a napkin. You don't have to get too precise. The target, 618 entry. So this is a little interesting in the sense that we're not waiting for confirmation bars, no wicks, no engulfing candles. I don't even use candlesticks in my trading. So 618, that's it. What you're looking for is the price to bounce and say, you know what, 618 is a nice move, but there should be some exhaustion here at least, or at least some pullback. So at worst that happens is you get some meat off the bone, and even if you hit your target, you have your stop at break even and you're good. All right? Minimum risk reward 1-to-1, preferably. It's not always the case. If you're going to be trading a lot of scalping strategies and having several trades a day, it's okay to be a little off. The key is to take advantage of the opportunity. The target is the prior day close. Remember this, filling this gap per se. And look for a 1.3 to 1.6. The reason is when you stick your order in there, stick your nose out, it sometimes will bite you. Okay, and then we're looking to go into exit mode. And you could set your rules based on it. There's a lot of flexibility. But once it starts moving in a direction, really move that stop to break even. You will have about 18 to 26% of all your trades break-even trades. So you're going to make your broker a little happy. But the scalping thing is it's got to work. And if it doesn't work, GTFO. Okay. Note in here, I have a hull moving average as sort of like a conservative confluence. So if price is moving in that direction, as soon as it goes under the hull, I can maybe think about entering. But in most cases, for those confluence junkies, but in scalping, we don't need a lot of layers of analysis. Just retracement, hit it. Remember, the magnet here is the prior day close, just like the magnet in the prior strategy was VWAP. So we're looking for a magnet where price historically is going to tend to gravitate to. Does it happen all the time? Of course not. Remember, one of the frustrations about scalping is you are going to take a lot of stops. They're going to be small, and the size on here should be small too. Most of my trades on the S&P futures in scalping is 1 to 2 contracts. I'll travel for say 2 weeks, and my rule is I don't have more than 3 contracts and 2 on the NASDAQ to where it happens. And that's about 1/6 of my normal trading size. You're out on the road, smartphone, keep it simple. Wi-Fi questions, keep it simple. We're here to get crumbs off the floor. Okay, so let's reiterate the best of the best scalpers. They talk in math. They think in bets, right? Remember we just talked about the bounce. Where? 618. We're looking for a bounce and a 618 retracement. That's where I'm pretty much, done. Don't overanalyze. They're able to insanely read markets that they specialize in. The key there is the specialty. Focus on 1 to 2 markets. That's it. Maybe you're already trading them already, right? That's even better. You get to learn these little quirky nuances about certain markets and how they gravitate. It's a really good value add. And most of the traders that we've interviewed, one of the successful ones, they all said, there's something about it. I just understand this market really well. The second they close a trade, 100% of the focus is on finding the next one. Move on. That's my point I'm trying to say here. Is even on the bad trades, don't get frustrated over it. And quite honestly, your size should be small enough to where if you have 2 or 3 small losses in a row, don't pack it in. Based on the fact that you're going to have bad days, just they don't work out, but your stops are going to be relatively tight and your size is going to be super, super, super small. Measure performance by series, not actual trades. So like I just said, you have a couple losing trades in a row, it's not the end of the world. You should expect it. If you're a scalper, you should expect it. And a bad day is not a bad result per se, right? A bad day is when you don't stick to your rules. So if you stick to your rules and it just didn't work out, the math will play out. Just let it play out and remain focused at all times. Always focus on the next one. It's like making donuts, all right? Comes with the machine, make the donut, put it in the box. Here comes the next one, make the donut, put it in the machine, put it in the box, and we're done. We are advantage players. Someone asked me, what do you do for a living? And I always say I'm a risk management specialist. I have a risk management consulting company. My trading facilitates that risk management principle. But we're advantage players. We're APs, as they call it in the poker world. We're just looking for an edge, and we're manipulating that edge. That's all we do. And we just rinse, wash, and repeat for small little crumbs that accumulate over time. Are we good? It's a lot to chew on, particularly on the strategies. Get familiar with them, move it day by day, a little bit each day, you'll get better and better at it. Are you ready to crush it? These markets are waiting for us. Let's do it.
All right, so big takeaways there, I'm sure. Let me know in the comment section below what you like about this video, what takeaway you got out of it, what things you will apply. If you want us to do part 3, leave us your questions below. We'll be having a look at them and use them for maybe future trainings on scalpings. I look forward to see how we can help better. Make sure you're subscribed if you're not done yet to not miss any video. And I'll catch you back here in the next video pretty soon. Ciao.